Hey, Tom, it's good to see you. We have a really important topic today. We are talking about how geopolitical events affect the markets. Of course, we're talking about the tension right now with Russia. US equity markets are lower as investors try to determine what impact Russia's latest moves will have on the global economy. Investors are pulling money out of stocks and into traditional safe havens like gold and bonds. And I found this chart, which I find really interesting. Asset classes year to date. No surprise here that we see oil at the top of the list. But Tom, what else stands out to you here?
Hi, Erin. Thanks. Good to see you again.
Mhm.
Um, Two of the big things that really stick out are not only, like you had mentioned, oil, but the commodities, right?
Right.
But stocks and bonds are going both together in a negative direction. There's been this belief or this myth over the years that bonds and stocks always work in opposite directions. The first big sight of that not being the case that we saw was around 2008 when that market crashed. And really, again, at that point, the only things that were making money were things like commodities, oil, gold, CDs, those types of cash value life insurance. So this is where a good portfolio manager or managers will help the clients, because you have to look at historically that a lot of these things that people have believed in the past just aren't factual.
Right. No, and you hit it on the head because the 60/40 portfolio, I think, recently had its worst monthly performance in a very long time.
Yeah.
So I just want to remind everybody watching that you have a team of investing experts behind you. That includes Brookstone's CIO, Mark Diorio, and he took the time to create a table and kind of crunch all the numbers for all these other geopolitical events. Take a look at this. And Tom, I know you've seen this and studied this already, but this shows how geopolitical events often don't have a lasting impact on the market. Specifically, the average one-day decline is negative 1.14%, with a total event-driven drawdown of negative 4.39% over 16 days, and then recovering in an average of 35 days. We live in this moment. We think it's going to last forever, but statistically, Tom, that's not what we see.
Right. This is what happens when people are emotional with their portfolios. People will panic sell. They'll get
Mhm.
out at the very bottom, and then they'll be waiting to basically until they reach the markets recover and return to the very tops before they have enough confidence to get back in. But as you can see from the chart, it doesn't take long for some very dramatic events that occur for the markets to recover. This is where good professional management comes in to help advisors to guide them through these more turbulent times. This is one of the great things that Mark Diorio and Alex Bobbin and Brookstone, our team of CFAs and investment professionals, help us guide our clients through these kind of times. And it's important, again, to take the emotion out of what you're doing and try to be as objective as possible.
Right.
One of the things that we've been doing really since the beginning of the year is we have been shifting client portfolios to these types of instruments and into a more conservative position. So we didn't wait until Russia invaded the Ukraine or anything like that. We've been very proactive because we saw this coming. We knew that there was going to be some type of correction. Unfortunately, no one has a crystal ball that allows us to know the exact day, but it's something we were prepared for and we've been doing.
Mhm. And this dovetails perfectly into the next question, Tom, because of course we are humans. We want to, or we tend to invest emotionally. But when that happens, and again, this is a great graph from Mark, if you pull out and in over a 15-year period, and you just miss the 10 best days of the market, which are often smushed right up against those bad days, like you were saying, look at how much money you lose in the long term.
Right. And again, this is about the emotional side of
Right.
investing. And it's not only that you lose this amount, an amount of money in a short period of time, but when you take into account years and years of compounding and
Right.
reinvesting, your problem becomes so much more dramatic. And again, this is where good professional guidance will help the average investor or the person who doesn't want to be a do-it-yourselfer, be able to withstand the different market cycles and the black swans and the events that occur outside of the norm.
Right. And I know that you take this on, Tom, as just as part of your job. If any of your clients are concerned, you welcome their questions. It is your job to kind of talk them through these uncertain moments.
Absolutely, it's my job to do that. We've taken that on professionally and ethically to make sure that we're creating portfolios and remaking portfolios in the client's best interest, to make sure that our portfolios are doing what our clients need them to do. It's not just about investing in the stock and watching it go up and down. This is people's life savings at stake. This is people's retirement money, their college money, everything that's important to them, things that they've worked their whole lives for, sacrificed, saved for. So we take this very seriously. We try to stay as on top of things as we possibly can, continuing to educate ourselves. As a matter of fact, I just came back, as you know, from Austin, Texas, where we had a big meeting with Mark and the investment team at Brookstone and a number of other investment companies to talk about what's going on.
Yeah, it is so important. Tom, this was really helpful. And if anybody watching this has any questions about what's going on or how they should be invested and what their portfolio should look like, what's the best way to reach you?
Best ways are to call the office, 973-394-0623, or my direct email address is tjoconnell@internationalfinancial.com. And I do my best to get back in touch with everybody within 12 to 24 hours. This is the kind of market where people need a lot of hand-holding, which is fine. That's what I'm hired to do, and I'm glad to do it.
That's right. Okay. Tom, thank you so much.
Thanks, Erin. Good seeing you.